Now, let us invite Mr. Kirk Sims, Director, Head of Emerging Manager Program of Teacher Retirement System of Texas. He will give a presentation on expectations for Japanese asset owners and emerging managers. Mr. Sims, the floor is yours.
Thank you very much. I appreciate the opportunity to present to you today and talk about the structure of the Emerging Manager Program for the Teachers Retirement System of Texas. If we can go to the next slide, please. So this is the structure of the team, and I wanted to start with this slide because I think it's very important to understand what structure works for each organization. Our structure is based on an investment team dedicated to emerging managers, along with key partners that work with us in order to give us a greater view and access to the universe of managers. So I am joined by an associate and an admin, but then we also have, for our private markets investments, a relationship with Grosvenor Capital Management. And we also have a relationship with the Rock Creek Group for the public markets. The relationship with the Grosvenor Capital Management team also means that I have a dedicated employee on site that works with me in my office as part of my team. Now that's really important because as you look at the opportunity set, unless you have a very large staff, it's very difficult to be able to get a good feel for the entire universe of both private markets and public markets. So by adding subject matter experts, it allows better access, it allows better investment due diligence and better operational due diligence for the managers. Now, just as important is the program advisors. And as you look to build a program, an emerging manager program, that is the most important consideration that you can have, is how do you integrate the program with the rest of the investment team? I report directly to the CIO. So there are no layers between myself and the head of the organization. I also have an advisory panel of senior members of each one of the asset classes that I am invested in. So I have a senior member from infrastructure, a senior member from private equity, a senior member from real estate, and a senior member from public markets. This allows me to then have a direct connection to the asset class at the main trust outside of my program, and allows me to add managers to my emerging manager program that are important to the asset class. That way, the managers will have a better opportunity to grow, build a relationship, and hopefully graduate from the emerging manager program into the main trust. Next slide, please. So this is some highlights of the program. And this is general information, so you can see that the program has been around for 17 years. We currently have 4.9 billion in commitments. The overall program size is 5.9 billion. That includes assets that we have yet to commit to a manager. Over the life of the program, we've backed 200 managers. That 200 managers equals 330 different investments for the program. I mentioned earlier how important it is to have a path to graduation for these managers. So you can see in the middle, 7 managers have graduated from the program into the trust, and they are currently managing $3.4 billion for the trust. In the United States, part of the initiative for emerging managers is also exposure to what we determine as diverse managers. Diverse managers in the United States are comprised of African American, Latino American, Asian American, women, and veteran-owned firms, because we view the opportunity for them to be more difficult, and we try to engage with them to bring them the opportunity to manage money for the trust. The last comment I will make on this page is that we also have a special pool of capital that we call Emerging Manager Select. Let me tell you why that pool of capital is important. I am normally writing checks to my managers between $15 and $30 million. However, the trust, TRS, writes checks between $100 to $300+ million. We needed a pool of capital to help transition managers from the Emerging Manager Program to the main trust. So our higher performing managers who have met the criteria that we have in place have the opportunity to then qualify for this pool of capital, where they will get checks between $50 and $100 million and continue to build a relationship with TRS. Next slide, please. So I wanted to touch on the performance because I know that everybody is interested in how well the program is doing. So these numbers are through September 30th of 2021. These are the numbers that were reported to the board. You can see that the 1-year return for the program was 25.6%. The 3-year return is 10.3%, and the 5-year return is 11.1%. All of which is well ahead of our targeted return for the program. You can also see in the charts below that the program is primarily private capital. It is 80% private capital and 20% public markets. And out of that 80%, the majority is focused on private equity, followed by real estate. You can also see what I was saying earlier about diversity and how the portfolio is majority diverse, with the highest percentage going to Hispanic Americans, followed by women. I'll give you some more detail on the structure as well. It was mentioned earlier during the opening presentation of assets under management are routinely about 0.5 basis points. For us, we have a 1.1% target in our asset allocation for the Emerging Managers Program. So our allocation will grow as the AUM for the trust grows. Also, I will give you the profile that we look for all our emerging managers. We are invested in funds 1 through 4 for our private markets. We are looking for fund sizes of $1 billion or less. And we are looking at firm AUM, so total AUM for all the strategies of $3 billion or less. That qualifies as an emerging manager for us. Next slide, please. So I wanted to end with a timeline to show you how the program has matured over time, because I think this is very important. I would not expect a new program to make the same type of investments that TRS is making now, because we have gone through various stages of development. You can see at the bottom, we have what we call EM 1.0. That's our Emerging Managers 1.0. That is our initial iteration of this program. You can see that we started with private equity. And as we matured and built the foundation through private equity, then we added another private markets class, which is real assets, where real estate fell under that category as well as infrastructure. After we built the private markets portfolio, we then added the public markets. And you can see where the hedge funds and the loan only were added in 2011. As that had a chance to season and mature, we were then able to become more sophisticated in our private markets book. And we were able to add co-investments to the private markets. As we continued to build a portfolio and gain confidence in the staff and the partnership, then we looked to add the ability to invest in strategies that were not funds. So the next major event for the program was in 2019, because we launched what we call Emerging Managers Innovation. Innovation allowed us to invest in strategies that were not funds. We could be seed capital for certain strategies, which was the first capital for new manager launches. We could be joint venture capital. So joint venture capital for managers who were not yet ready to have a fund, but had a very good investment strategy. We could provide the bulk of the AUM for them to invest in that strategy. And then we also, in 2019, launched the program I mentioned earlier, Emerging Manager Select. The other milestone that happened in 2019 was that we added a dedicated infrastructure portfolio to the Emerging Manager program. And finally, last year, as we completed our transition to EM 3.0, we established a EM Select program for our public markets portfolio as well. So hopefully that has given you an indication of how we do business here at the Teachers Retirement System of Texas, the structures we have in place that allow us to be a well-functioning team, and how the strategy has improved and become more sophisticated over time. And with that, I think I have a couple more minutes. So if there's any quick questions, let me know. Otherwise, thank you for the time.
Thank you, Mr. Sims. Is anyone from the audience has question for Mr. Sims? Maybe we can take that in chat.
Very good question. The question was, do I invest in VC in Asia? We have made the decision to focus on growth equity as opposed to venture capital at this time. And let me tell you why. And this is not just in Asia, this is global. It's very difficult for us to reach the scale necessary for venture capital investing, because so many of the funds are on the smaller side and they're more effective being smaller. So it's better for us to invest in growth equity strategies that allow a larger amount of capital to be allocated to the companies. I see one more question. What are your expectations for Japanese asset owners? I think the expectations are that you reach out to learn and that you work with us. I am available. I have colleagues in the US who are also available, and we're happy to share our thoughts and ideas about how we run the Emerging Manager program. And with that, I'll stop because I think I've run out of time.
Kirk, one more question.
Yes, please.
To confirm.
We understand
Can
that
you hear
it's
me?
past midnight. So thank you very
One
much.
more. Well, one more question.
Yeah, sorry. Any. So I want to confirm that Japan-based emerging managers are qualified for your emerging managers program as well, right?
Correct. We are a global program. So we have the ability to add managers around the globe. The criteria is the same for a US manager as a Japan manager. So yes.
Thank you.
Thank you. I appreciate it.
Once again, thank you very much, Mr. Sims.